Top three things in my notebook this morning. Number one, Europe. Number two, copper. And number three, the U.S. bond market, specifically the 10-year bond yield. So first on Europe, if you look at the bounce, and again, we learn a lot more from the bounce within bearish trends than anything else, including the declines. On the bounce, you get nothing that's above any line of resistance that matters, and that would include on the FTSE, the DAX, or if you want to go downstream to the Portuguese index or to the Greeks. So again, in fact, what you see is actually the lowest quality bouncing the most, which is the most frightening part. And U.S. navel gazers look at Europe as being resolved. So we would take the other side of that, most definitely. So if you're thinking about doing something in the SPOOs this morning in the face of European bouncing, we take the other side and say sell it. Sell both Europe and sell U.S. growth as growth continues to slow here in the third quarter. Now, the second point would be on copper. An interesting move in copper, suffice to say, with Chinese data being, not great, but again, it's not bad anymore either. And what you end up seeing was a sell-off in China and Chinese equities into the close. China still, of course, closed up on the session. The Hang Seng was up 0.8% to up 10% now for the year to date. But copper broke its intermediate-term trend line for the first time in a couple months here. So it's something to watch in the face of that. The trend line at Hedgeye for Dr. Copper, which isn't really a doctor anymore, maybe a doctor for Chinese demand. But again, the trend line is $3.15 per pound, and now that is broken at least for the very immediate term. And finally, the 10-year bond yield. It's kind of funny to watch. It's kind of sad, funny, and humorous all at the same time. But again, you go to 2.47% on the 10-year bond yield yesterday. People are like, this is it. This is it what? I mean, another buying opportunity? I hope you did that. So again, you look at the S&P futures are up this morning, but there's a funny thing that happened on the way to the bond buying forum, which is in fact that bond yields are falling this morning, folks, which is a great leading indicator for growth slowing, and again, a great case to be long the long bond on any pullback, which would include yesterday's. So those are your top three things.